Yuri Khodjamirian joins us. He's with Tema ETFs, including a NASA ETF, which is focused on space. It's an area of interest that I know is interesting to both Malcolm and I. That's why you're here. But also, you've been a professional investor for over a decade. You said 15 years in our pre-interview. And Yuri, Malcolm and I have been talking about just, well, for me, let me speak from my perspective instead of speaking on behalf of Malcolm. He could speak for himself. This is one of the scariest markets I think I've seen, where the S&P has barely flinched over a war in Iran. Earlier this week, we had a president threatening to wipe out a civilization, and turns out that was a bluff. But I'm at a point where I'm like, things feel so unstable and incredibly difficult to invest in. We've been looking for, we've been talking about real estate a little bit. We've been talking about the software crisis, or the narrative on software completely changing because of AI. Generally, how are you approaching this market?
Yeah, look, we, the way I kind of think about it always is things are always happening, right? As you said, I've been doing this for 15 years. There's financial crisis, European crisis. There's always something going on geopolitically. And over that period, if you look at the chart of the S&P 500, it just keeps marching up. There's drawdowns and then eventually goes up. And, we've never, most years you have like a 10%, 15% intra-year drop. So one of the things I like to look at is kind of the fundamentals. We spend a lot of time on fundamentals of the market, but also fundamentals of the companies. If you look at just S&P earnings, they just keep getting upgraded. They're quite strong. The growth is strong. So I always anchor a little bit to that. Now, some of that is obviously being driven by the large CapEx spending going on in AI, but that's a big driver of the economy and of the market, and it's going to continue to do so for the next couple of years if you believe some of the numbers being put out there. So the fundamentals kind of the guts of the market are pretty good. Of course, you'll have ups and downs in different parts. And then in terms of what we do, which is looking at really interesting areas of the market where you have structural growth inherently because of the theme, it's just a fascinating place to be, because there it's about finding the good quality companies exposed to that. So we just do a lot of bottom-up work. And often in these situations, like you've seen with Iran, I just encourage everyone, if you're a good investor, just spend time on the bottom up. Spend time looking at the companies, make sure you have conviction in the ones you're invested in, and it will be all right if you're looking at the fundamentals over the long
run. I hear you on fundamentals. One fundamental thing I look at is the Shiller PE ratio, which is earnings smoothed out for, I think this counts as fundamental. That's earnings smoothed out for inflation on a rolling basis. It's a way of measuring how expensive the stock market is. It's something I've been worried about for a while now. So far, I've been wrong. Right now, it's at about 39 times earnings. The highest it's ever been, that's the second highest it's ever been. Highest it's ever been is, November of 99 at 44. So we're within spitting distance of that. And to me, that would be a fundamental concern. Malcolm wants to say something.
Has it not been elevated like that for the last 4 or 5 years, though?
It's been in the 30s, but
here's why I asked that. And I don't think that metric is as reliable now as it used to be. We are in a totally different stock market than pre-COVID. And I think people are still wrapping their mind around the fact that we cannot approach this market with the participants that now exist in this market, and also with the investing tools that now exist in this market, with the same lens that we used to pre-COVID. So whole new ball game. This time is different.
Fair play.
But specific to the environment that we're in right now, I think the problem is that we're in this precarious position where the earnings growth that we're expecting for this year looks impressive until you look at the fact that it's really only expected to come from 2 or 3 companies. And those 2 or 3 companies are semiconductor companies. And those 2 or 3 semiconductor companies sold off massively after reporting their earnings this last period we just got through. So taken together, that doesn't necessarily mean a strong stock market following this earnings period we're about to go into. It just means these 3 companies are going to statistically look good on paper, which doesn't do a whole lot.
My view is, I learned a long time ago, an old mentor of mine told me that, you can't really time markets with valuation. And Shiller is particularly bad because it's such a long-term measure. I think they smooth their earnings over like 10 years or something like that. Mm-hmm. It can tell you that you should be careful, and it can tell you that you should think about the valuation of companies relative to that valuation in the market, which actually is something that tells you can pay up for some businesses, if that makes sense, because the general market level is so high. but the fundamentals kind of drive things, and things can stay elevated for a while. As Malcolm pointed out, the Schiller has been high. I think the difference isn't massive in terms of 30 or 39 or 35. It's just telling you, be careful. In terms of the composition of the earnings, I think there is a belief out there, and I'm probably slightly in that camp, that you are in this kind of new AI CapEx cycle, and it's helping semiconductors, and semiconductors are becoming so important as a crucial bottleneck, and that will drive growth for multiple years. And so that is sort of telling you it's fine in the S&P. The problem, though, is the concentration. So one of the things that we look at a lot, and we actually have an ETF for this, is you probably don't want to be taking so much concentration risk with the S&P 500 right now. But the companies in it are great and good. You probably want to just de-weight, so cut the weight of each of the big holdings. But cutting it all the way to equal weight is a very aggressive move, because valuing Nvidia and the 450th company S&P is not the same. You shouldn't weight them the same. So what we do is just a historic average, and it's an ETF called DSPY, so deconcentrated SPY. So the concentration risk that you point out, Malcolm, I think is a real problem for sure. And so even if I believe in the semiconductor story, you probably don't want to be taking that risk too much. The second point is it just raises the hurdle for analysis. So, we're going to be talking about space. We're going to be talking about maybe some other things. You've got to be looking for areas in the market where you can match that growth rate. And there's not that many, right? And increasingly less and less companies are growing fast. And so therefore, you're just seeing this concentration in the market, and people are looking for those businesses. And in some of the thematic areas that we look at, it's good to be there because the growth is there.
You want to get to space? Malcolm, anything you need to get off your chest? You good? I want to make sure Malcolm's good. Sorry,
yeah,
you're the guest, but we need to make sure Malcolm's doing well.
Whatever,
of course,
man.
absolutely.
I think Yuri made great points. I think we can. Here is my one thing from what Yuri just said. I do think the point you made about where do we find these pockets of growth? Where are the opportunities? I think this kind of ties into where Ricky's wanting to segue so badly. I think we need to figure out a way to incentivize companies to go public while they're smaller. And I don't know what that incentive looks like. I don't know if it is relaxing the quarterly reporting requirements as has been floated. I don't know that necessarily solves the problem, but I think there should be some kind of incentive for smaller startups to go public sooner so that the rest of us have an opportunity to participate in that traditional sense, rather than trying to get average, everyday, ordinary, I'm doing air quotes as I use these words, by the way, for the listener, the retail investor that's been basically taken to the cleaners in some of these private credit funds, private equity funds, whatever, because they're trying to find that earlier exposure to these things that we're talking about. Rather than going there, how about we figure out a way to incentivize the behavior we really want to see, which is people having these companies on display in a public way?
I mean, I think you're spot on. It's an issue I think it's not talked about enough.
Like a $2 trillion IPO is impressive, but it's not necessary.
Should it actually have been happening? I think private markets have grown up and grown so big that they can provide capitals that companies can stay private, and they clearly see an advantage, right? What you said, transparency, maybe something else, maybe less questions asked, less kind of daily press scrutiny or whatever it is. But I think you're right. There is something there that we need to think about, whether the public markets are serving, they should be coming in earlier. Why? What is it the cost? Is it the liquidity? Something's not right.
It's because they don't need to.
They don't need to, but they do, because think about all those employees, all those people that are going to be locked up in the site. They've all needed liquidity, right? They built a fantastic company. Why shouldn't they have the right to sell the shares to investors that want to participate with more appreciation? And the power of compounding is really crazy here, right? Because they're staying private longer, but it's that last bit that's where loads of the value compounds, right? So you're losing a lot as a public shareholder or a public investor, and that's why people are searching for it. And, we'll probably talk about that as well. But investors are really creating that exposure for some of these businesses.
One last thought, and then I swear I'm going to talk about space economy, which, by the way, Yuri, I'm sorry. I did say if Malcolm had another thought, then he got a little pissy with me, and then he had a thought. So you just have to make sure with him. and we're all good.
You're coming in hot this morning. I don't know what I did to you in the.
I'm trying to get spicy
in the prep for this, but man, you're coming in hot this morning.
If you're a business owner, you don't want your key employees selling all their shares and then leaving the company, because that's something that Musk doesn't want. He wants his employees to be able to stay. He doesn't want them buying 8 vacation houses and then retiring.
I don't really agree with that. Like, if you wanted to, you can find liquidity, you can borrow the money. I mean, these markets for private businesses become very, very liquid, as we'll sure talk about in a second.
Let's do so my thesis for my space bet was very simple. It was with Rocket Lab, and this was one of the few times I've been right. Not one of the few. It was a time I was right.
You said it right. Freudian slip.
Freudian
or
slip.
Not.
And basically, I was looking at Rocket Lab, and I'm thinking, this company is able to actually launch things into space. It's valued at less than $1 billion. This makes no sense to me, because that's an actual moat for the company. And that was kind of the end of my fundamental analysis that led to my a speculative stab a couple of years ago on the company. And also figuring that people who want to put things into space may want other launch providers than SpaceX. But
absolutely,
we'll go top down. And right now that company is in a hype cycle that has me a little concerned, because I think sometimes with these space companies, they can detach from fundamentals.
That's been my challenge this whole time, is the hype around it.
So we can get to all that, but Yuri, you're going to have a much better overall thesis for the space economy than what I just laid out, which was kind of a dart to the board. So yeah, what's the overall thesis you can serve the listeners of This Time Is Different?
So let's kind of try to unpack maybe the main drivers, and then people can have a sense of where we're going. And one of the things that I really look for a lot as an investor is that those sort of inflection points where things start to unlock. You don't want to be too early, because you're taking all that risk, right? Where you said rockets blow up, things happen. But you want to be at that point where the technology is progressing at such a pace that it's going to enable loads of things. And the way we do that for space is you look at launch costs. So you basically simply look at the dollars it costs to send a kilo to low Earth orbit, which is about between 500 and 1,000 kilometers above the Earth's surface. And that cost was pretty much stagnant for many decades, right? It's the shuttle program in the sort of $10,000, let's call it, maybe a bit more. What SpaceX accomplished, and companies like Rocket Lab, which came a bit later, did, is they've pushed that cost down by 90%. So we're now down in the sort of $1,000 range. Just try to conceptualize, and the learning rate that we're at is about 20%, maybe a bit faster. Some companies slower for others per year. So you're going to start to see those costs start to drift in the hundreds, let's say in the next decade. That is going to unlock an enormous amount of opportunities for companies, and is going to create more demand for sending stuff up into low Earth orbit and beyond. And so I think that's a really important thesis. The company that has single-handedly enabled that is SpaceX. And what it's done and how it's done it is it's basically brought a commercial mindset to space. So historically, space was expensive, risky. A satellite would cost $600 million. You'd send it up geostationary orbit. That's like 20,000 kilometers above Earth. You're talking about things go wrong, you lose $600 million. It was risky. There was thousands of suppliers. You had to assemble the whole thing. It's really complicated. And SpaceX brought a very simple kind of innovation in terms of commercial mindset. Let's try stuff, fail, try again. And they had the capital and Elon Musk's power behind it to try that. The second thing is, let's bring a commercial mentality. We're going to manufacture at scale. So Starlink is a great example. We went from these geostationary satellites, really expensive, to thousands of satellites in low Earth orbit, creating kind of a band around Earth. That's faster delivery of broadband. I mean, you've seen him play computer games, right? From the airplane. Incredible, right? That you're able to do that. So this commercial mentality and the falling launch costs just going to enable that. They enable that falling launch cost. The other thing they did was they were just ruthless with suppliers. So they were saying, if you're not going to deliver, we're going to try to build it in-house. And they had the scale and capital to do that, which is historically not how you do aerospace development, right? Even if you think about airplanes, right? Airplanes are Boeing and Airbus assemble literally thousands of different suppliers all screwed together into an airplane. Rockets are even more complicated. The components are much more engineered and often over-engineered. So we've moved from that to like a vertically integrated business that is able to bring in suppliers and then works with suppliers and raises this as the standard for the whole industry. So you're now at that kind of beautiful inflection point where the costs are coming down and entering these kind of milestone areas where things start to happen. Low Earth orbit satellite constellations. That's the thing that's happened. Next thing, data centers in space. When I first started looking at this stuff, I laughed at it a little bit, but then you start to realize, up in space is free energy and there's no need to cool anything. You just blow the hot radiation kind of away, right? And you can just set up those satellites. They have the latency quite quickly to Earth, and you can harness the sun's power, which is infinite. And so it kind of makes sense. You start to think about manufacturing stuff in space. So if it's cheap to send things up, I can start to build stuff there and send it down as well. Proteins, like some protein production is much, much better in the vacuum of space, or semiconductors. So just kind of sum it up, that is a huge driver of what's opening things up. And also this commerciality of space is just going to accelerate. And then you've got companies like Rocket Lab that you talk about and others that have caught on to this and realized, well, if we start to do a similar sort of thing, we're going to be able to compete. And people need other providers. As you say, people don't forget that Starlink was turned off for Ukraine, for example, and people need multiple providers, whether it's in Europe, Japan, or other ones in the US as well. So it creates competition, which is a really driver of this. And you don't want to be too early because it's too risky, but you want to be at that beautiful inflection point where technology starts to enable new things, just like we've seen with AI, internet, all of those other things as well.
I'm just curious, how do you think we know whether we're too early still or whether we're in the middle of that inflection point you just said?
Yeah. And you're probably touching on valuations, right? Valuations are going to move around a lot in this space. And unfortunately, a lot of these companies are probably towards the higher end of valuation. So you have to think and believe you're at that inflection point, because the inflection points accelerate. And as we've kind of seen with AI, the sort of the investor's mind and the human's mind is just not used to exponential changes, right? And by the way, AI is, if you look at token usage, it's parabolic, not exponential. And so we're going to struggle to understand it. So you have to be very convinced you're at that point. You're probably not always going to be right? So things will happen, it might stall, but the general trajectory is there and that inflection point is happening. So what we did is just built a lot of conviction that you are there. So even with the maybe slightly higher elevated valuations, you can quickly grow into those because of the TAM that gets expanded. And the TAM isn't space tourism. It isn't colonization. We're talking about stuff on Earth, right? Data centers, broadband. I mean, even the broadband piece itself is still massively undertapped.
I think some of the engineering challenges are going to take significantly longer, though, than investors may have patience for, or that could contribute to the reverse part of a hype cycle. You talk about data centers in space. I think there is rightfully a lot of excitement for that, because data centers on Earth create a lot of pollution. We have an issue in Colorado, which is that, water is a little hard to come by, and these data centers need a ton of water. So why not put them in space? You have solar panels that are going to be immense in terms of size that you need to put into space and need to operate. You mentioned the cooling system. The cooling is pretty variable. You're either really, really cold or really, really hot. And if anything goes wrong, you either need a human to fix things, or you have to have a robot, which may be difficult with, I don't know if we're quite there yet in terms of humanoids or orbital robots that could take care of those sorts of things. So, we've heard it from Musk. I think has changed the economy and our expectations for the future, maybe more than anyone alive right now. But there's also a tendency to overpromise in terms of when things will be ready.
So there's a lot to unpack there. I think there's always going to be technological challenges, right? We keep pushing. I would say one of the big innovations, just hitting on the point I said before, is the commerciality of space. So this idea that we're entering a stage where you don't have to over-engineer, spend a lot of money on things. Some of these low Earth orbit satellites have consumer electronic parts in them. Like that's the grade that's going in, because they don't really care if one of them drops out of the sky. And in fact, if you understand the kind of the orbital dynamics of low Earth orbit, it's about 5 years it's going to be up there, because they just crash into Earth or burn up in the atmosphere, to be more precise. So you don't have to worry, right? And you have thousands of them up there. So if one knocks out, you can get another one up there pretty quickly. That's the mentality that maybe we'll go into data center. They'll be more expensive, but that's what we're going to be thinking about, right? So the point is, this commercial element has entered into satellite construction, meaning you just have lower costs and faster production cycles and just faster cycles of innovation. It's very similar in rockets, right? If we were sitting here 20 years ago or 30 years ago, like you had China, Russia, US, and NASA, that's it, right? You're not talking about commercial space. Now you have multiple providers of launch platforms, and they are all competing and pushing for innovation. And there, it's just been trial and error. It's been, there's been a lot of mistakes. But as you said correctly with RocketLab, it's established a successful launch platform. It works. So when it works, it continues to work. The biggest challenge, though, technically, is the reheating, right? When you reusable rockets, you guys probably know, like the shuttle, right? It would come back to Earth and it would have ceramics on the bottom of the shuttle. And because the temperatures go really, really high as it's entering the atmosphere, all of that friction, they had to then by hand replace all of those ceramic tiles. It took 9 months to do before it was ready to go up in space again. So we have to figure out how to solve that challenge. We've done it for the boosters, but actually the rocket itself, that's going to be the really difficult part. But I wouldn't bet against Musk. So to your point, overpromise, underdeliver. I think the history of SpaceX, and I really recommend everyone to read it. You're going to have to, right? This stock's coming to the market. It's going to be in benchmarks. You're going to have to read about it. Is one of under promising and over delivering on some of the stuff, which is not the history of space travel at all, or space exploration, or space rockets.
This episode is sponsored by Capital Area Planning Group. Capital Area Planning Group is a fiduciary wealth management firm that specializes in helping high net worth individuals and families navigate the complexities that come along with managing concentrated stock options, multiple income streams, and an ever-changing tax code. While our team of certified financial planners are well-versed in all things personal finance, our areas of expertise include equity compensation, estate planning, and multi-year tax planning. At Capital Area Planning Group, we believe in pricing transparency. That's why our fees are posted on our website, right alongside the various services we perform on behalf of our clients throughout the year. If you're tired of receiving the same cookie-cutter advice from your financial advisor, then don't wait. Reach out to us today at capgllc.com to experience a better approach to wealth management. Again, that web address is www.capgllc.com.
And to be clear to Yuri and the listener, some of the things I'm saying is because I'm coming from a more, not pessimistic lens, but critical lens, just because I want people to, like, we always think about incentives. I'm really interested in space. That's why I wanted you to come on the show. And I also want people to be able to, respond to pushback and know what the potential criticisms may be for any type of investment where there's a lot of hype behind it. And
Absolutely.
So that's part of where this is coming from as well. I promise it's not personal, and I was too mean to Malcolm earlier, so I issue an apology to him and to the listener. Not to the listener, just to Malcolm. And I want to talk about the special purpose vehicle.
Yeah.
Because I think this is an important part of your investment strategy, and it's also something that I know we have questions about. So inside your space ETF, your largest holding is SpaceX SPV exposure. What does that mean, specifically the word exposure in there?
Yeah, absolutely. So let me talk you through this. And just hitting on your point, I think you're absolutely right. Everyone should be very critical and think about these things and do their own analysis. At Tema, we spend a lot of time thinking about the ETFs we're going to launch, and we only launch the ones where we really believe there's a structural reason for this theme continuing to grow. And then it's kind of incumbent on us to navigate the valuation cycles, the different growth rates of different companies, and to pick interesting companies. I'm sure we'll cover a few. Obviously, the most interesting company in space is SpaceX, right? It's responsible for more than 50% of launches. I think the numbers are 2/3 of all of the mass that's been sent up into low Earth orbit. It is the pioneer, right? And it's the leading company. And so when we set up to build this ETF, NASA, we thought, okay, we're going to need to think about SpaceX, and we're going to probably have to go through the hard work of getting the private shares of SpaceX into the ETF, because they just will feel incomplete without it. We really pride ourselves on purity of exposure. It's like, or what I've said a few times before is, it's like having a semiconductor ETF without NVIDIA. It just doesn't kind of make sense as an exposure. So if you're going to go for purity, you then have to go through getting SpaceX into it. And so how did we do that? We went into the secondary market. And this is to Malcolm's point earlier, right? That market has become incredibly liquid, way more liquid than it was sort of 2-3 years ago. And certainly when I was first starting my career, it didn't even exist. And I think it's a testament to the fact that this company's probably stayed private too long. So there are people who want to transact these shares. These secondary markets are liquid, but they're not that easy to navigate. So you want to be very careful. So anyone listening, if you're out there trying to buy stuff on that, read all the documentation, and in many ways, consult your financial advisor, all of that stuff. We're obviously an institutional investor, so we looked quite carefully at all the documentation, and we're purchasing shares in SpaceX through SPVs. So these are special purpose vehicles. We buy shares in those vehicles, and they own the underlying exposure in SpaceX. So effectively, the shares are owned by the SPV, and then we're a shareholder in that through the ETF.
There's been a lot. I mean, we've talked about it on the show. One of the difficulties with SPVs is sometimes the company doesn't know you own shares in the company. And when I'm looking through your prospectus, when I'm looking through the supporting documentation for your ETF, I can't find, I see there's a special purpose vehicle, and I see that, that this comes with investing risk. I can't tell how many shares you own, where you may have gotten those shares. And I feel like for something that is as complex as this, I can't see I see the composition in the portfolio, but for someone like me, and I'm speaking directly on behalf of myself, with less trust in special purpose vehicles, I don't see a ton of transparency on where those shares are, or if they're actually shares of SpaceX proper company.
Those are all great questions. So the best way to think about it is compare, say, you and I going and buying an SPV share and this ETF, right? This ETF is a SEC-registered, transparent vehicle run by institutional investors who've been doing this for decades. Our investment team is 100+ years experience. We, including investing in private companies, we have spent time analyzing the documentation of those SPVs, put it into the ETF, and we're comfortable that we own what we own. The SPV, the documentation is very clear. These are shares in SpaceX that are just owned by a company. It's an intermediate company. So what we always tell investors is, be very careful going the SPV route directly yourself. But inside the ETF managed by institutional investors, we're trying to give you that exposure. We've done the work for you. The other thing that you get with SPVs, Ricky, which I'm sure you're going to get onto, is fees, right? There are lots of hidden fees, management fees, performance fees, admin fees, all that kind of stuff. What we've done as Tema, as an issuer, we're very proud of that, is we've decided to take all of those costs ourselves. So we are paying all of those costs. The investor is not. And we felt that was important because we wanted to give exposure to SpaceX and exposure to the space economy in a transparent SEC-registered vehicle with a simple fee. We don't want to hit investors with lots of fees that come later. And I think that's a really important part of the value proposition. So we're taking care of the fees. We've read the documentation, and we're giving it to you inside an ETF that is a SEC-registered transparent vehicle. There are restrictions, right, in terms of how much you can own and all of those things. But yeah, go ahead, Malcolm.
I was going to ask the question, I think, a little more cleanly than I think Ricky asked it, and how your answer probably sounds to the listener. Because I know what you're talking about, but I also have read prospectuses on ETFs inside and out a million times. The listener may not recognize that language and frankly may not care. So what I'm thinking about is, how will you guys participate on IPO day? Are you SPV to the level that we will see you behind the SpaceX team at the NYSE ringing the bell? Sorry, this is going to be a NASDAQ listed company now. So
we don't know yet, but yeah, probably NASDAQ, yeah.
Or are we going to be at a satellite party outside of the exchange? Or are we going to be in a Zoom room? How close are we to IPO day?
Okay, so we're SPVs means that Tema's name is not on the cap table of SpaceX, right? I think that should be clear to all people involved. These special purpose vehicles are created to pool lots of different investors together to buy those things. And often there'll be a fund that invested in SpaceX or an employee or whatever it is that just wants liquidity pre-IPO. We are, you can see the percentage, you can see the AUM of the fund. We're getting close to about 100 million, and depending when this recording goes out, this is on the 10th of April. I'm saying this, so it's our biggest position. So you can kind of do the math, right? We're not anywhere near the biggest holder of this stock. Remember, SPEs is a private transaction, right? So we are going to be locked up just like the employees of SpaceX, just like Elon Musk. And there's going to be a lockup at IPO. And that lockup, nobody knows yet. But once the S1 is out and the information's out, probably 6 to 12 months. 6 in a good case, very likely they're going to stagger it, just given the amount of people that are going to want to exit or to get liquidity. Our view is that's fine. We are long-term holders of this. We like it as an exposure. And once it becomes public, it becomes public. The other point is valuation. We value the stake at the cost we're acquiring at. So every time we do a transaction, we just value the stake at that. So we're not trying to value it at any future value or any DCF or any IPO thing like that.
Move on to some other companies or stay on SpaceX?
Well, a thought really quickly about
Sure.
SpaceX from the inside out. You were talking before about how actually both of you guys were talking about how they have long-term employees who want the liquidity, need the liquidity, and are trying to figure out, like, what do I do here? Because what happens when shares of a private company go up so aggressively, so quickly is, yes, on paper, it means these people who work inside this company, whether they're employee number 1 or 10 or 6, those people's life looks one way. And then the people who are employee number 6,000, their life looks a different way. But what's happened is this company is like, I don't even know what the multiple is at this point, but in the last 5 years, the valuation on this company has like 50x'd, which means then that your paper wealth has also 50x'd, but the cash that you actually have in your bank account has stayed the same. And so your ability to exercise these shares that you now own, trying to make sure that you don't lose any of the value that's been created on the other side, it's a very tough equation. I actually have a friend who's a financial planner. His name is Mike Zung. Focuses almost exclusively now working with SpaceX employees, helping them figure out the nuances of, like, when do I exercise? How do I exercise? Do I do a cashless exercise? Or do I borrow the money from my mom and dad, or, steal it from a bank? Or what do I do here? Because, like, this thing is getting so large. And so I think one of the things that as a listener, you can take comfort in is knowing that there really is that level of exposure via secondary market, simply because there is that level of demand from employees inside the company that is trying to get liquidity for their shares that they've been accumulating for all these years, as the value of those shares has been 50xing over the last 5 years in anticipation of this IPO, in anticipation of the merger, quote unquote, that we just saw with XAI and Grok and whatever else they decided to throw into the mix. Like, all those things have led to there being a tremendous amount of shares available from people you wouldn't necessarily expect would be willing to part with those shares.
You spot on. That's exactly what's happening in the market. And there's also some early backers, venture funds, that are trying to create some liquidity in their for their investors as well. As you know, lots of private funds have struggled to return money to investors, and I think that's part of the equation on the offer side. On the demand side is very strong. People want to have exposure to this company. So we're having to, it's a competitive market. It's a big company, Malcolm. So it's we're talking like, what, the last valuation was 1.25 trillion. So people are, as you say, there's a lot of wealth created, and there's need to transact.
The other side of Starlink, I'm gonna transition away from SpaceX, is there are more companies in this space where I do think there's a lot of hype, and it's difficult for me to make sense of it. AST SpaceMobile is one of them. It's a company I started following a little over a year ago. It's a company that I should have bought shares in immediately when I started following it. But one of the things I see with this company, and for listeners, AST SpaceMobile does satellites that do internet for phones. So Starlink, you generally need the little hockey puck to get internet. AST SpaceMobile does internet in what is traditionally dead spots for cell carriers. So it's a big deal, and they have contracts now, I think, with several different telecom companies. But when you look at the company, it's a $38 billion company. It's like more than 300x sales at this point. And one of the things that I see with it, which can be a good or bad thing, is that there's a almost religiosity among their retail shareholder base where, being a shareholder of AST SpaceMobile is a part of my identity. You find that a lot less with a company like PayPal or Kroger. And this is a company that I look at and I see such hype behind it that it gives me a little bit of pause. And as a fundamental investor, Yuri, how are you looking at a company like AST SpaceMobile?
Yeah, look, Rick, you're hitting at the kind of heart of, I would say, the challenge of investing in the space economy. Because what we want to give investors kind of like pure exposure to it, right? So this is like a perfect company. But we also want to make sure that we're cognizant of valuation, fundamentals, management teams. Unfortunately, the history of space, and especially space communications, is mostly bankruptcy, right? How many companies have gone bust? How many companies were fraudulent, promised things that they weren't there? Lots of them don't even make it to send stuff into space because they just run out of money with the overpromised investors. You have to be super careful. You have to read a lot, do a lot of fundamental work. We have shares in AST SpaceMobile, and for us, it's a really interesting company because of that direct link to devices. No one's really achieved that quite yet, and it's a I think for us, what was kind of eye-opening when we did the initial analysis is just how many people in the world are unconnected to internet and mobile telecommunications. There's about 2.5 billion to 4 billion. So even if you have that number, let's take a quarter of that number for people who can actually afford this kind of communication, it's still a really, really large market. And I'm not one, I've been a fundamental investor for a long time to talk about, valuation relative to the TAM, but the potential is there. And so what we always do is we think, okay, how are they penetrating that? Where are they thinking? And the thing with AST is you've got contracts signed with providers, right? I think the last numbers are 40 of them. So all of the major telecoms providers have signed this. And so this is like an extra service, right? If you have T-Mobile, you can pay $10 a month and you basically have connection wherever you go. And for those people that are undercovered, right? The other stat I read is 85% of the Earth's surface has no mobile coverage. So satellites are going to be the ones that provide that. Now, most of that is water, so you have no one there, but a lot of places just don't have it. Rural communities, all that kind of stuff. And this is a solution to that problem. So they've got definitive commercial agreements for, I think, 500 million lines already. This is a company that has built a commercial kind of engine, built the actual infrastructure that's related to it. And yeah, I think the big challenge is probably valuation. But for sort of the patient investor, some of these companies, it's kind of what you said earlier, Ricky, right? Space is so risky. Like once you've already done this stuff, it creates a moat a bit around it. Like they have value because they've created that opportunity, right? And so it's the other thing we often look at with these particular companies is just their debt position and balance sheets, right? This is a net debt neutral company. They've got to convert. So it's a decent balance sheet, right? And often in the space kind of communications, you have terrible balance sheets. So we've got to work with what we've got to work with, right? So if we see a very large TAM, good commercial agreements already in place, a clear line of sight to that, and a good balance sheet, as in the company will fail to take advantage of that, we then think that this is a decent investment. I want to definitely segue into some of the other areas where we're very differentiated, as in these companies like Rocket Lab and AST. I think they're well-known space companies and they belong in a space ETF. But one of the key areas is, and we can talk about, is the suppliers into the space economy, which is something that we have that basically no other competing ETF has. So we can talk about those a little bit. So I think, but just finishing up on AST, I think our view is for the very long-term investor, you can be comfortable that there's a good trajectory there, but we watch the valuation very carefully because there is definitely this kind of area of hype, and unfortunately very recently as well.
So this is the part of the space economy I am personally actually interested in, because it seems I can see where in the next 10 years this thing can come to fruition. So the idea of launching gigantic rockets into space for transportation purposes and bringing them back to Earth so that we can reuse them and not lose the however many gazillions of dollars were spent building it in the first place. to me, that goes into the too hard pile as an investor. Like, I don't doubt that it is possible. We've seen the demos and all that. But realistically, that could be like a 30-year from now comes to fruition kind of solution. I'm more focused on ASTS and these low Earth orbit satellites where they are solving a problem today. One, as you mentioned, 80%, I think was your number, of the Earth is not covered by satellite communication, or is not covered by
mobile towers,
mobile phone technology. That's a huge TAM that is immediately solvable, right? Or if I think about the fact that where AI computing is going, it's at the edge, it's not in the data center eventually. So we won't need these gigantic clusters of chips sitting in these gigantic, gigawatt factories in the middle of America that no one wants to look at and doesn't want in their backyard, but wants the construction jobs that they bring, but doesn't like the fact that when the jobs are gone, the jobs are gone. Like, eventually it has to move here because that's the fastest way to get the compute to me, other than to put it on the device itself. And there's got to be an in-between before Apple figures out or has the desire to do that. So all that to say, this to me seems like an obvious place where the opportunity is. The challenge is what you just got finished talking about, the valuation here, the hype around this. I had a friend who first educated me about ASTS last year. I think it was June or July. Company was trading at like $50 a share. And even then, when he and I were talking about it, I was like, this looks silly. Like, this looks more like Twitter and Reddit just want me to buy it so that they can sell their shares for more. And then I'm the one left holding the bag and I'm the greater fool. Then I look and shares hit $120 or something like that. And I'm like, man, maybe there was a greater fool than me. I should have just bought the shares and held my nose. This looks to me like a part of the ecosystem where you have to just buy the shares, hold your nose, say, I'm going to take a flyer here and I'm buying a lottery ticket, and not necessarily think about it in terms of the rest of your investment portfolio that's meant to be an investment portfolio with a thesis on here's why I own what I own. This is more like, I don't want to be wrong 5 years from now, so let me just take a flyer.
I think I'd agree with you on quite a few of the elements where you said, particularly the long-term view. I mean, you have to take a reasonably long-term view with some of these companies. The way I would encourage people to think about it is this is probably one of the few open-ended growth stories in the stock market. There aren't that many. Most of them have an end. And to your point about large rockets going to space, the beauty of investing in some of these businesses is you basically have the near term is covered by the low Earth orbit satellites, data center space, manufacturing. Some of those things are going to be enabled by those following launch codes. The medium term to long term is covered by all of that kind of stuff. And so you're getting this kind of nice optionality while you're sort of milking or developing the stuff closer to Earth. Most of space development, I think, over the next, let's call it 10 years, 5 to 10 years, is going to be stuff focused on Earth, right? If Elon Musk gets his way, you can have travel, you can have all kinds of things. Those are going to be enabled. My view on valuation, and you have to be very careful. And one of the things we really pride ourselves on NASA is we're going to be watching that for you in a way, right? We are professional investors. We've looked at this part. So investors who own like a single holding in AST, they could benefit from diversifying away and investing in a kind of a broader, so where you've got a bit of SpaceX, a bit of all of the other companies as well, and a really kind of pure exposure. That's sort of what we're trying to do. And then the supply chain, which I'm itching to talk about.
We can do supply chain.
Yeah. So
supply chain. Look, you can do Filtronic.
Yeah, or any of the companies. I mean, maybe give you the thesis on the supply chain,
sure,
which is why it's interesting. I think the first thing is we pride ourselves on just trying to find these kind of untouched, under the radar companies, right? And they live in different countries, right? They live in the UK, like Filtronic. They live in Taiwan. They live in Korea. So for the sort of average US investor, these are in the kind of hard to find bucket, and sometimes even the hard to buy in your brokerage account bucket. We think these are some of the most interesting businesses because they're fast growing, they're high quality, and they're often lower valuations than the sort of marquee names like AST or Rocket Lab. And what we're seeing is they are supplying into SpaceX and other space companies. And just going back to the point I said earlier, right? SpaceX is ruthless about their suppliers. So if you're not delivering, you're not going to be a supplier of SpaceX. So it almost self-selects the better companies. And Filtronics is a great example, right? They do all of that equipment that goes on the satellite and the base station that allows it to communicate to each other. SpaceX is a big exposure for them, or a big customer. So they had to work really hard to get that, right? Otherwise, SpaceX would probably just develop it. I mean, Elon Musk's trying to build his own chips, right? He's visually going up against TSMC and the likes. That I think is a very interesting angle. Or you take a company like Sphere in Korea. It essentially builds all of the specialist alloys for SpaceX rockets. It took us a while to find these kind of hidden gems, and that's what we really pride ourselves on, a key part of the fund, that exposure. And there are plenty of other companies, 3D printing company called Velo, some of these other businesses that are doing the special types of semiconductor substrates that you need in space to be hardened against radiation. There are, outside of China, there are very few suppliers of that. So these are really interesting businesses and are a big part of this ETF, aside from the kind of usual companies that you've seen.
I know this isn't how you want me to ask this question, Yuri, but Malcolm, I actually kind of like the idea of just the question is, what are the publicly traded suppliers of SpaceX? And the risk is that you have one big bad customer that if they say no and Musk decides that he wants to go build his own, high performance radio frequency component because he doesn't like what Filtronic is doing. You look at, I think Filtronics, that's an under $1 billion market cap company though. So it's one of those
exactly. And this is they're hidden because a lot of them are smaller companies, right? But SpaceX is there important. But yeah, please continue. Yeah, absolutely. You are a bit at the mercy of SpaceX for some of these businesses, Filtronics particularly.
No, that was fine. That was the end of my thought, is just who are the suppliers of SpaceX? Are they publicly traded? Use that as a filter to look for some of these companies.
But can Elon Musk go out and build his own version of everything, right? I know that's his MO. That's generally how he responds when he doesn't like the way something is happening. But I think the hard lesson Elon Musk should have learned, I don't know that he is a person who learns lessons. He's kind of like Jerry Seinfeld. But I'm not sure that he can go out and build his own XYZ, right? And that's the challenge, is you have to have suppliers so that they can be focused on the one thing that they do, to bring that into your ecosystem to allow you to do the one thing that you should be doing.
Yeah. It's obviously a continuum, right? Over here, you have Boeing and Lockheed, United Launch Alliance, right? We're going to have 10, 15, 20,000 suppliers. I'm going to bring it all together and assemble this rocket for you and overcharge you for it, probably. Over here, you have, SpaceX, but it's probably not quite where they have everything. But you know the story, right? One of the rockets blew up because the screw wasn't right and it was a supplier. And after that, the rocket, as you said, is just an expensive thing to blow up. So I think it's a mentality within the company that the suppliers have to deliver to a very high standard. The other thing is the pace of innovation and delivery, right? So it's not just you're good, we've certified this screw or this particular alloy and you're fine. It's constantly keep improving, keep moving. And so I think it is, some of them are needed because of the R&D capability, their history of development, and just the speciality you need for it. So yeah, you can't be completely reliant on. I mean, even Teslas aren't. But the truth is, we think these are some of the most interesting businesses. They're small, they're under the radar, they're lower valuation, they are growing fast, and they're not taking the risk of rockets blowing up.
Now, I think you guys are doing interesting work. I'm glad that we were able to have you on the show. This is a place that, I think myself and a lot of other retail investors have trouble understanding. It is Tema ETFs. The ticker symbol is NASA. It's an easy one to remember. Yuri Khodjamirian, thanks for your time and your insight, and appreciate you being here, man.
Thanks so much, Ricky, Malcolm.
Information shared in this recording and by its guests represent the views and opinions of the guests and does not represent the views or opinions of the host. This content has been made available for informational and educational purposes only. This content is not, nor is it intended to be, a substitute for professional financial advice. It is always recommended that you seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your personal financial situation.